I'm not going to mince words, Intel is in serious trouble. But there is light at the end of the road, and Intel has a path to future prosperity. So let's get into that. So yeah, exclusive Intel CEO to pitch board on plans to shed assets, cut costs, source says. So I'm going to get into this article, and I'm going to get into what I think Intel needs to survive this absolute crisis of a scenario. So let's get started. By the way, Intel stock currently trades at $19.78 per share, down 1.57% on the day. Look at that 52-week move, or 5-year move actually. 5 years down 57.87%. I'll tell you this, Intel wishes they were NVIDIA. Well, everybody wishes they were NVIDIA. I wish I was NVIDIA. Choo boy. But yeah, share mouses to like and subscribe. Okay, so first off, I'm going to give you a brief precursor on the situation that Intel is in. Now, I covered this all in a previous video, so if you want, watch that. Please watch that video to get more in-depth insights into this. So I'm just going to cover it briefly in this video, since you've probably seen the other video. So let's just say that Intel is going through a cost reduction plan of greater than $10 billion. That is a huge number. So you can see that non-GAAP R&D is declining. Intel guidance is declining. It's declining hugely, big league. So yeah. So what's going on is Intel is also firing 15% of the workforce is being fired, and they're cutting costs wherever they can. Why? Why are they cutting so much costs? Number one is their highlights. Their gross margins are pitiful, 38.7% in the last quarter. What's even worse than that is next quarter is projected to be 38%. So from 38.7 to 38% gross margins. Those are horrible for a chip manufacturer. That's down 7.8% year over year. Not basis points, percent. That is... Okay, so here's the thing on Intel. Intel is actually split. They split their finances into two different categories now. So you got the chip side, which is this. This includes consumer, data center, and networking and stuff like that. So anyway, you can see the consumer segment's doing great. Fantastic revenues, fantastic profit. Little stagnant, but still lots of money being printed there. Their data center is doing actually pretty poor, barely breaking even on profit, $900 million. So it's there, but at least it's not negative. But anyway, and the networking is about break even. So where the thing is, where is the problem? Well, the problem number one is data centers at 9.1% gross margins. Again, they wish they were NVIDIA with, what's NVIDIA? 85% gross margins in AI? But anyway, here's Intel's problem. Intel's problem is their foundry system. So as you can see, their foundry market is at negative 66.5% gross margins. Just last quarter, it lost $2.8 billion in operating income on $4.3 billion in revenue. Now keep in mind, virtually 100% of this revenue is to Intel. They're not yet bringing these factories online to a point to be able to manufacture these chips for others and becoming a chip foundry and a chip contract manufacturer. Not yet. Almost. Not yet. Actually, Broadcom's testing chips right now, which I'll get into also in a second. I got lots of new news in this video, so stay tuned. You'll see. So Intel's problem is this. Intel is spending, in the last 6 months, $11.6 billion on these plant upgrades to become a contract chip manufacturer. That is a lot of money to spend, and they're basically just burning this cash because they're no longer profitable. They're no longer profitable. They are significantly free cash flow negative. So you got a net income of negative $2 billion. Subtract negative $11.6 billion, you have a free cash flow of negative what is it, $13.7 billion in 6 months. So how long can they last at these levels? Cash and cash equivalents and short-term investments of about $29 billion and long-term debt or total debt of $48 billion. So they can live like this for a little bit, but the thing is that these foundries cost a significant amount of money. Each foundry costs about $5 billion to build and 5 years to build. So these expansion plans are going to cost Intel about $100 billion on all these new fab chips that they're fab factories that they're making. It is a tremendous cost, and Intel currently does not have the cash flow to afford it. They simply do not, even with the subsidies. Okay, so let's get back into the article. I don't mean to waste your time with that because we've gone over that. Let's get into the article. Intel CEO Pat Gelsinger and other executives to present plans to trim down the company. CEO will present ideas at mid-September meeting. Plans could include selling Altera programmable chip, sources say. The one thing I'll say about Altera is while it's struggling against Xilinx, down like 50% year over year, and while it's currently producing a net loss, the net loss pales in comparison to the foundry business. I think Intel really needs to focus on foundry and cutting that back. Altera, while losing money, isn't losing. It's like Altera is losing about $10 million a quarter. The foundry business is losing $2.8 billion a quarter. You tell me which one you want to pull back on. So yeah, capital spending cuts may include German factory expected to cost $32 billion. And that factory was actually delayed earlier this year. So that whole factory system is going to cost $32 billion. It's more than one plant. It's multiple plants in Germany, $32 billion. So yeah, Intel has retained Morgan Stanley and Goldman Sachs to advise on asset sales. And if I was them, I would definitely advise. Okay, I'll give you my advice at the end of this video. I'm just going to say what things are now and what Intel says now, and then I'll give my advice later. So yeah, Intel CEO Pat Gelsinger and key executives are expected to present a plan later this month to the company's board of directors to slice off unnecessary businesses and ramp capital spending. Revamp. Not ramp, revamp. Numbers got to go down, according to a source familiar with the matter, as they try to revive the once dominant chipmakers' fortunes. The plan will include ideas on how to shape overall costs by selling businesses, including its programmable chip unit Altera that Intel can no longer afford to fund from the company's once sizable profits. Once sizable. Let's see here. Intel declined to comment. The proposal does not yet include plans to split Intel and sell off its contract manufacturing operation or foundry to a buyer such as TSMC, according to the source and another person familiar with the matter. It's not yet finalized. And the rest of it we kind of already knew. Nothing else to describe there. Now, here's the thing. Intel sort of is late to the game on AI. They kind of just fumbled the ball on artificial intelligence, and Intel took the ball and ran for the touchdown. NVIDIA has already got the touchdown in artificial intelligence. They won. NVIDIA's going to get 80 to 90% plus of the AI market. AMD, maybe 10, maybe 20%, I'm guessing. Intel's going to get the scraps. So yeah. The German factory was actually halted, and we're going to get into that in a second. In August, Intel said it expects to cut capital spending to $21.5 billion in 2025, down 17% from this year. I think they need to cut it further than that, given the numbers I just gave earlier. We went over that, and the Altera spin I already just discussed. And yeah, Gelsinger said that it's been a difficult few weeks. He can say that again. It's been a difficult few weeks, and we've been working hard to address the issues. It's interesting. actually know somebody, or I used to know somebody who worked at Intel. This was many years ago. Many years. This was like 15 years ago. So anyway, it's just an aside. I don't own stock in Intel, so I'm just an outsider. So I don't have I'm just giving my opinion on this stock. I'm not a stock owner. I'm not short the stock. I'm not long the stock. I'm nothing. So I'm just giving my opinion. I'm just giving my full-hearted opinions on Intel. So yeah, what else did Intel do is they delayed their Ohio plant by 2 years. It'll start production in 2027 or later. And that's a good thing for Intel, as they could cut back on their spending. They need to reduce their spending as much as possible. As much as possible. And the German factory's been delayed. They claim too much black soil and EU subsidy approval. And those fabs could still come online by late 2027 to early 2028. Again, I'm going to give my advice at the end of this video. Again, this is just these are the facts. These are where we stand. Exclusive Intel manufacturing business suffers setback as Broadcom tests disappoint. Now, this article came out today, September 4th. Broadcom has been testing silicon wafers at Intel's manufacturing business for months, sources say. Silicon wafers from Intel failed Broadcom's tests, sources say, dealing setback. Intel's contract chipmaking effort is crucial to Pat Gelsinger's turnaround plans. Okay, so here, these chips, Broadcom is one of the first contract chip designs that Intel is going to do. And what they're doing is they just sent Broadcom a few wafers, maybe one wafer, I don't know, of the new Intel 18A process nodes from one of the probably one of the new factories. I don't know where the nodes came from, but it's been built with the new ASML high NA EUV machines. So what they did is, this is their new technology. As with any new chip design and any new chip technology, the initial batch is going to have bad defects. It's going to have a low yield. It happens to everybody. Happens to them all. Whenever TSMC does a new, this is a new node, the first few batches are going to have lots of defects and a very low yield. It takes like a year to grind out all the issues and get the yield to a very high level. So these are very profitable ventures. So this is normal. This is normal. I don't know why this article was even created, to be honest. This is not an issue. This would be an issue if Broadcom went to Intel and said, you know what, we're canceling the contract. But Broadcom has not canceled the contract. It's not been canceled. So this article is, in my opinion, nonsense. So I'm going to skip it completely. However, there are a couple of tidbits that are important. Intel is committed to about $100 billion of expansion and new factory construction at several sites in the United States. A crucial part of the company's expansion includes attracting big customers such as NVIDIA or Apple to fill up capacity at all of its new sites. Okay, so this is one of Intel's biggest blunders, in my opinion. I think it's something that Pat sort of overlooked when he set this decision 5 years ago to become a contract chip manufacturer. I think it's going to be difficult for Intel to convince their competitors to send to Intel their designs to manufacture chips for these companies, for their competitors, because the glass wall is going to be very thin here. It's going to be glass; you can see through it. And if I was, say, NVIDIA or AMD or any competitor to Intel in, let it be CPUs, GPUs, artificial intelligence, I would be hesitant to give Intel my design plans, because Intel is a direct competitor in these areas, a direct competitor. So I would much prefer, if I were them, Intel's competitors, to stay with TSMC, to stay with whoever they're using, whether it be Samsung, Global Foundries, one of these other ones. but I would not do Intel because of this issue, because of the conflict of interest. So that's the biggest thing here. However, the company Intel plans to be manufacturing ready by the end of this year for its own chips and begin high volume production for external customers in 2025. So for a company like Broadcom, it might make sense. Broadcom is not really a direct competitor to Intel. They're separated. So for Broadcom, it could make sense. But for who Intel wants as customers, they want NVIDIA. They want AMD. They want all these other customers. They want Qualcomm. But why would they give Intel their designs? Why would they share and give Intel insight, a peek into their technology? I don't know. It doesn't make sense to me. So what do I think Intel needs to do? What I think Intel needs to do is I think they have two choices. Choice number one is to either spin off or IPO their foundry business. Because here's the thing, Intel's chips are built on the 18A node, and they've been spending years designing these chips on the 18A architecture. So they can't really deviate from that. It would be difficult at this point for these chips, for Intel to switch to TSMC's manufacturing nodes. It would be impossible, basically. They would have to completely redesign the chips. So they need these current plants that are currently manufacturing and complete and able to manufacture these new chips to continue doing that. They can't just close the plants that are currently running because they need these 18A chips for this year and next year and going forward. So I think Intel either needs to spin off their factory divisions or sell them to TSMC or some other company, say Global Foundries or somebody else. Now, the question then becomes what they do with the factories that are under development. The factories that are under development, I would just cancel. I would cancel them because I'm just going to say it, they cost too much money. They cost too much money, and whoever they sell it to is not going to want to spend, $70 billion to finish them. If you're TSMC, would you spend $70 billion to complete those plants? Those Intel design plants? Or would you rather spend $70 billion and do plants that you've designed under your architecture, under your nodes, under your technology for your customers? So that's what I think here. Let me know what your thoughts in the comments below. And don't forget to like and subscribe. Thank you for watching. I will see you in the next one.